Okay, this is a video on how I buy options, how I place my orders, and also how I get out of an order. So it's not a video on when I place the options because as you follow my daily updates, then I tell you when I buy my options or when I get out. But what this video is about is how I actually place the option, how I actually find options. Now this is going to be on the SPYs, which is based on the ES, and so this is what I trade. So let's say I'm going to buy an option or several options. What I do is, of course, during the daily update, I tell you when I'm going to do it. Now, this is live right now. This is actually a simulator right here. So this, I think it's delayed like whatever, a couple minutes. But it's pretty close to live what's going on right here. So in reality, I would not actually place an order here, but I'm going to go ahead and do that anyway because the orders I would place would be up in here, and then when the market broke down here, then I buy more put options here. Now this, I'm talking about put options, but I would not place an order right here because it's pretty close to this support line. But I don't need to tell you that because all of that's covered in a daily update. I'm just going to cover how I buy an option. So if you have Thinkorswim platform, TD Ameritrade, then that's what this is. Whatever platform you have, you're just going to have to find out how to trade, how to buy the options. But this basically tells you how I do it. And okay, so anyway, so right now I'm in the chart tab, and I'm going to go over to trade. Click on trade. Now these months here, these are regular trading months. I don't buy the weeklies. I only buy what's called the regulars. Why? Because they have more volume, and of course, you know, when it has more volume, you have more people trading in, and it's easier to get in and out of a trade. So on this simulator, you can see that I already have a couple positions here. I actually bought a position day traded this morning. But I'll go ahead and click on a March. Now, if you're going to go, if you're going to day trade, you're going to go with the front month, which is March. We're already in March. Let's see here. So, okay, so anyway, I would, if you're day trading, I would trade any one of these because you're in and out in a day. So it doesn't matter if it expires that day or in a week. You know, so I would trade any of these. I would try to find out which one has the most volume. And what I mean by that, well, let's see, I gotta fix this. Let's say all. And of course, you want to find, well, let's see, I don't have to say all. I can do maybe 10. Go to 14. So you want to find something that's within what's called in the money or at the money. Okay, what that means is you want to buy close to this line right here. You see the dividing line, you want to buy there. That's at the money. See, the market right now, the SPY is traded, you know, at 393. That's the last. So it's at about 393. So you want to find 393 here, and that's right here. So that's at the money. If you buy out of the money, then you're going to be buying these out here in this area. And if you buy in the money, it's going to be here. So I can explain that. Out of the money, they're going to be cheaper. You can see the last price on them right here. And you can see the last price when they're in the money. They're more expensive. So what that means, so I'm back to the chart. So if you're going to buy, like right here, I mentioned 393, so that's at the money. That's where the market's actually trading. So that's what you want to buy. You want to buy right there. If you buy out of the money would be down in this area. And the reason that they call it out of the money is because the market has to get all the way down to that point in order to start making some really serious money. You can start making money, but some real serious. Now, if you buy in the money, that would be up in this area, and that means the market has already been there. And so you can make, as soon as this thing starts moving down, you're making some big money going down. Of course, if you're at the money, then the prices are reasonable, and you start making money right away because it starts moving down and starts gaining value. Where over here it already had gained value, but they're more expensive. So that's in the money. Buying anything in this area would be out of the money. So back to this. Again, this is out of the money, and you can see the last price. They're cheaper than in the money. In the money, they're more expensive. And so I buy at the money. Now this morning I bought this one right here. This was actually over here at that point, but now it's moved because the market has moved down. So I've already gained value in that. And I'm going to get out of this position today because it's only a day trade. So let's go ahead and pick an option. So this one here, I'm going to right click on that, and it's going to say send. Let's see, where is it? Add to, I'm sorry, over to trade right. And then I'm going to go over to the charts. And this is my watch list. And that would be, oh, I already have 2 in here, so that's not it. I think that one's it right there. See, hold on a second. Okay, so this is it right here. I'm going to go into say a 4-hour chart. I might have to go 30-minute chart. Okay, so this is where this option is right here. You know, it came down, and the options have their own charts too, and it came down, bounced up. So it's right here at 163. Now, if I buy 10 options of this, and this is how I trade it, I would go into active trader. It's kind of big right here. And then I would, and that's the price. So what you do is I always buy, of course, a minimum of 10 contracts. Of course, I buy more than that. I buy 30, 40, 50. But let's say a minimum of 10 contracts. And you would multiply the 10 contracts times 1.62, which would come out to about $1,600. Okay, so if you times it times 1.55, so that's about $1,500. And up here would be 1.78, so it'd be about almost $1,800 for 10 contracts. So it's already a default at 10. And then if I'm going to place the order, I always place market orders. I don't place limit orders. Limit orders means that you get to pick what price that you can buy these options at. So if I place a limit order, let's say I want a better price on this, and I pick it down here, this market has to come down here and hit that in order to fill it and then come back up. It might not do that. You might lose out. So that's why I don't like limit orders. So I might lose a couple of cents here. I don't care. So I always place market orders, and it just fills it around here because I don't care about the pennies, or even if it was $100. I don't care because I plan on making, thousands of dollars on this. So what I do is I place my order and I say buy, and it tells you right here. So it tells you how much this is going to cost you. Cost of including commission is about $1,600, $1,700, and there's the commission right there, and there's the total right there. So that's all you have to pay attention. Is my account. It's not really my account number, but of course it's a simulator. And so yeah, that's it. It even says simulation here. So I'll go ahead and send it. And so what that means is it was filled. So now I have a position. At 162, I bought at 162. You can see the brackets right here, and that's where I was filled at 162. Okay, and if I go into messages, the messages always tell me, you know, I got filled, and it tells you the time when I got filled. So I bought 10 of the SPY contracts March. And so I have a position in the market right now. So I just purchased these. Now you can see the market's going down. So right now it's losing money. Like I said, I wouldn't normally buy here anyway, because of course I'm just simulator and I'm just giving you an example. But you can see how it's already lost money here because the market's already gone down. If it's going to make money, this is going to go up. But it's just to give you an example on how this works. Now, so if I go back to the charts, or to the SPYs, and that's where the SPY's at now. It's actually turning up from right here, from this support line, and of course I had bought somewhere down here and it's starting to lose money. But that goes to show you how I buy options. It's pretty simple. You know, I don't use implied volatility, I don't use a delta, I don't use any of that stuff. I just buy them outright, and this way I just get it over with. It makes it easier. I'm just in this to make some money, and that's what it does. And it's really that simple. So again, here's the there's the March options, and it's pretty simple. Like I said, you want to buy at this line. Now, whether you're day trading or you're swing trading, you still want to buy within this line. At least that's what I prefer. Now, some people like to buy out here because it's cheaper and they might not have that much money, and that's okay. And you can make some money, but you have to be very careful, because when you start buying out of the money, these markets, I'll show you, if you buy out of the money, let's say I bought up here, but I bought out of the money, and the market comes down here and it comes back up here, with a better example right here. If it comes down here and it comes back up here, you've already lost money, because now you lost the time value of the option, because the options have an expiration date, so there's a time value. So the longer this thing is stretched out, the options start to lose value. But if you buy it in the money, or you buy it at the money, or even in the money, and the market comes down and comes back up, you're pretty close to break even, only because the time it took to get from here and here isn't very long. And and you bought at the money, so it's worth more money that way. More people are interested in at the money rather than out of the money options. So that's what you have to be careful when you buy options. Depends on your strategy. If you're going longer term, you want to buy, 2 months, 3 months, 4 months out, and then this way you can kind of burn through these corrections, and it wouldn't really bother you that much, because you're going to be in for, you're going to be in long term. Let's say this market's going to come down to here or even here, and you bought put options here. You're going to buy them several months out, and you're going to buy them at the money, and so by the time the market gets down here, you're going to make some money. But in the meantime, when it comes down and it comes back up, then you've lost some money. Then it comes down, then you gain some money. Not lost any money, but it devalues. But basically, this video is for you to learn how to actually buy options. And again, you go into the trade section, And these are puts on this side, these are calls on this side. If the market's going up, you want to buy these. If the market you think is going to go down, you want to buy puts. And it's that simple. You just buy either puts or you buy calls. And so, okay, so again, here's the dividing line, and that means it's at 395, 394. That's at the money, because that's where the market's trading, 394. So it's pretty simple, you know. I mean, it can't get any easier than that. Okay, so let's talk about. Let's go back into the charts. Yeah, let's pick out that option. Here it is. I want 4. Let's go into 30-minute. So this is where we purchase our option back into the active trader, which is right here. And you can see we bought our options here, and now the market's down here, so we lost. So now we want to get out. Now I don't get out of the market here. I usually do it on my phone. It's a lot easier, and plus if I'm gone, you know, I'm not at my computer and sell it. So you know, eventually this market's going to go back down, so you can hold it. But see, this is a March contract, so I wouldn't hold it. Just to give you an example, I would have to buy in April, let's say, and hang on to it, even though the market might come down a little bit and then go back up. And that's where you have to practice money management skills, as far as if it comes down too far and you've already invested, let's say $2,000, how much are you willing to lose before you get out? I would pick anywhere from 10 to 20%. And of course, there's always exceptions, and I talk about those exceptions in my daily update. Okay, so the market's getting back up to closer to 162. It's back to 160, and now you're going to come back to break even. So this is how you can get out of the market, at least in Think and Swim. You can just hit the flatten button and say yes. Okay, so I just sold out of my position. So one thing I want to point out, when I sold that, it was actually at a limit order, and I always change it to a market order, and it still got filled anyway, but it was at a limit order. I never place limit orders, so that's why I do this on the phone. I don't do it here because this isn't set as a default, and so I always have it set on my phone. So anyway, I got out. That's how you get out of the market, and it's actually that simple. So that's how you buy and sell. Now, what's the hard part? The hard part, of course, this is the easy part, just buying the option. Of course, the hard part is trying to figure out when to get into the market and when to get out of the market. And that's why I have these balance areas and support lines. And this I talk about in my daily updates, and that's what you have to look at. But this, like I said, I'm just repeat myself, this is just to show you, this video, just to show you how I buy options and then how I sell them. And that's it. It's that simple. But, of course, that's the easy part. The hard part, I shouldn't say it's hard, but it's where you buy and where you sell. And that's what I explain in my daily videos. And so you have to watch those in order to keep up to date. I put a video out pretty much every day, and up to date on what's going on, and up to date, keep you up to date on my positions in there. And then you can do whatever you want. You know, you can trade pretty close to what I'm doing, or you can, you know, trade on your own, find your own system. So if we go into here, so this is a 5-minute chart. So if you're going to day trade, it's going to be exactly the same way. You know, if you're going to day trade this, you would do exactly the same thing. Here you have your charts. You got to figure out where you're going to get in, and then you go into trade, And the same thing, you know, you got, well, this is what happened with those options I just bought and sold. So the profit, the loss was $40. Not bad, not a bad loss. $40. So anyway, again, this is where you would buy these options. Of course, if you're thinking the market's going to go down, you would buy put options. Thinking the market's going to go up, you buy call options. So again, you would trade, look at this dividing line, and you would trade in here, and you'd pick out whatever option you want, and then you would go ahead and buy it. That's simple. And there we are. And that would be in a day trade. So if you think this market's going up, you would buy call options, and you would write it up to as far as where you think it's going to go, and then you would sell it just like you saw me sell it. And it's that simple as far as buying and selling options. Now that's how I buy and sell options. Now you're not going to find anybody else on YouTube, at least I don't think so, that buys and sells like I do, because I have a very simple system. I've been trading for 24 years, and I've gone into those really complicated systems. I bought courses, I spent thousands of dollars, and it just all came down. I came all the way back around to, full circle to trading very simplistically. I mean, this is just a very simple this. Of course, my mentors have been trading for, 20, 30, well, more like 30, 40, 50 years. They trade like this. You don't hear about them. They're not on CNBC or Fox News, nothing like that. They live in obscurity. They just live. They don't advertise. They're not on YouTube. You're not going to find them. But basically, this is pretty much how they trade. Okay, so I think I explained it correctly for you to understand. If I didn't, leave some comments. I can always make another video. I know I have a friend of mine that told me that she doesn't understand, but I thought I was explaining it correctly. But I have to keep in mind that when you're brand new to this, some of this stuff doesn't make sense. I get that. But I'm in a different place right now. All this is in my head after 24 years, so it makes total sense to me. But when I start explaining it, I have to explain it more on a different level than where I'm at, so most people can understand this. So if you have any questions, leave some comments down below. Again, other people that trade options, you're not going to find them trading the way I do, because they're going to be trading options. They're going to be using implied volatility. They're going to be using delta. They're going to be using all kinds of fancy things, and you don't need that stuff. You don't need any of that stuff. You can trade exactly like I just said. You just go to the trade tab. You go and you buy at the money, which is right at the line, anywhere from this side to this side. That's it. That's all you do. There is one more thing I want to point out. Okay, so this is important. I'm only going to mention that. I'm going to mention it here only because when you're trading other vehicles, let's say you're trading stocks, you always want to make sure you have enough volume and open interest. Okay, so volume those are the people that are actually trading today. And open interest, those are the people who already hold positions in the market. So you want to make sure that it's pretty high. I mean, look at the volume on this; it's crazy. So you're going to have to scan through these yourself to find out what. I didn't mention that earlier only because when you trade the SPYs, it's probably got the most volume in any other thing that you can trade on this planet. There's more volume trading the SPYs. I mean, there might be some other ones, but that's why I don't have to really look at them, because I'm going to be buying in the money. But if you're going to be buying stocks, it's a whole different story. So let's take, now Tesla I have on here because Tesla actually has a lot of volume too. I'm going to try a March. Not as much. You can see here, not as much as a SPYs, but still enough. I would still trade this. Now, what's the difference? If you trade something with really high volume and open interest, look at the volume here and the open interest here, and then we'll go into the SPYs. And you can see the difference right here. What happened here? You can see the difference. Look at that. Crazy how much volume. So what that means is when you go to place an order and there's enough volume, there's enough interest in that option, it's going to get filled immediately. I mean immediately. If you place an order with something that has very low volume and open interest, especially volume, it might not get filled right away. Only because there's not enough interest. There's not enough. If you're going to buy something, there's got to be a seller on the other end. And there might not be a seller on the other end. But when you're trading the SPYs, there's always buyers and sellers all the time during market hours. It's crazy how much. And that's why I trade this, because I don't have to worry about it. And that's why I place market orders. Now, if it was a low volume stock, then I would place a limit order. But I would never trade a low volume anything. So that's why I don't trade limit orders. Anyway, place market orders and I pretty much get filled at that point, at the price that I want, because it just moves so fast and there's so many people trading it. So, all right, so I think I covered everything. I can't really think of anything else. Like I said, it's a very simple system what I have. It's very easy. Again, you're not going to probably find anybody else trades like this because it's very simple. Everybody else has the bells and whistles and they got the colors and all the moving averages and the volume bars. You don't need any of that. So anyway, I explain that part in my daily videos and I repeat myself quite a bit, during the day about, how I trade. And how it's a very simple system, how you don't need all that, you don't need the news. Okay, I think that's it. That's, like I said, leave some comments down below if you don't understand what's going on here.